what I'm testing is the optimal entries for NFs, now called Betty's and Susans, or Betty's and Suzy's. Betty's are bullish NFs, Suzy's are bearish NFs. It is presumed that a Betty is in discount, local discount or absolute discount. So I'm going to discuss that in a second. What I've discovered is that using your typical 1 hour order block fair value gap after displacement when you expect to test and reject, or relative Betty's and Suzy's as the basis for support and resistance. When you use those, if you map that Betty, and just use the Betty as the example, if you map that Betty on the 1 hour, then you look inside that on the 1 minute time frame, that you find another Betty that originates that on a smaller time frame from the order blocks and fair value gaps that you expect to reject price. You can expect that the price will reject the mid of that Betty, and the pivots just beyond the Betty will hold. I have open questions. How do I integrate time of day, day of week, news, continual entries, retests, failure to get to the mid, stops, etc. into this? And I don't know yet. How do I enter if the mid is untested? I have an idea, but I don't know yet for sure. Does this change all of my entry strategy? And then the other aspect of that is that when you don't have a specific when you don't have a specific order block or a specific function inside the price that you expect to hold it as support, how do you navigate that? So I'll give you one quick example of that just so that I don't lose the idea. If I'm looking at this here, and I say, here's my Betty, and I think price, may reject here because it's at the mid. How do I? There is no order block here. There is a fair value gap, but it's unlikely that well, we'll find out. Actually, we're gonna do that right now. So this would be an example. So while price is up here, this is an example that you want to dig into this area, or if you look backwards, you can cut through candles and you can say, all right, well, probably not going to hold that. I don't expect that price to be held. It depends on how it gets there. But is there anything back here that I would expect would hold? And the only thing I can see is right there. I would say that. So I may that's I gotta stop pressing the end button or whatever it is I'm pressing there. I may say, okay, I expect this order block to hold. So in order to get to that, I take the mid of it all the way down to the bottom and leave that there. And then that includes the fair value gap and that order block. So here's how I would do that. I would come back here to this like that. So I'm going to take this off of the screen so you can't see it, but that's what I'm doing. I'm winding back. And what I'm looking for is a Betty inside of that space. And do you see one? I do. It's right there. All right. So there it is. And it should be green. And I'm also demonstrating the entire process. So now I can take that away. And I go all the way up. And it's way back there. And I get that. And it seems like it may not be that consequential. So now we're at the fair value gap on the hourly here. And we can run that back and map this out. And do we have a Betty there? We do. It's right there. Okay. So the question would be is what's a valid stop on the fair value gap and what's a valid stop on the other order block. And I think the answer for that is I'm just going to say randomly that if this is going to hold, then that's our stop here in this case, and if that's going to hold, that's our stop here. So we would expect, so in this case, You got 5 to 83, so that's pretty substantial. That's large. And you may want to just, these may be things that we need to work out before you can actually trade it or anything like that. So as we walk through, I'm actually gonna bring this over here so that we can see it. You can see that I'm walking through. Okay, so there you go. So here's the first thing. So we test into it at that's 15 seconds. All right. Oh, I see what's going on. Okay, so you test into it right here. So this is a good example of you buy, if you were to buy the mid, you buy the mid and you get stopped. And then it pushes down deeper here and then creates an NF, a Betty. It creates a Betty ahead of this. And so then what do? And that's an open question. I don't exactly know the answer. The only thing I'm thinking to do now is I say, okay, well, it held that, took that liquidity out. That may be a reason to buy. So we think that the mid of this may constitute support. So really what we're looking for is we're going to say, all right, if that's a stop run, then we shouldn't get below this. We really ought to not get below that. And so then what you do is you walk that forward and you come over to here and you say, you don't just automatically buy it and say, that's it, that's legit. You don't do that. You just say, well, it shouldn't do that. I don't know what it's going to do. Here's my Betty. So I come over to the Betty, and I sometimes this is a little tricky to do. Okay. So all right, it's already had its run up, all right? So you say, well, I think it should account for the mid there, but that's big, so I can't do that. I'm not just going to take the mid and hope. What am I going to do? I'm going to expect that it should not, like it may, as I look at this as a Betty, you've got the mid, and actually I'm looking for a 3 push, a deep fade, right? So that it had 1 and then it pushed higher, so I'm looking for 3 pushes, 1, 2, 3. Yes, that's true. I'm looking for that. But where am I looking for that? I am looking for a bullish NF right there. So I look back. Do I have one? No, I don't. I don't see one. Maybe you could say the mid of that right there, right at the very top. So let's just put a line there just in case. But I don't think I see one there. So what do you do in that case then? Well, then you have to wait for this to be tested, since there's nothing over there for you to buy. Wait for this to be tested and wait for it to be created again. If it holds this, it will create a Betty. And when it does, once it creates it, then you have your stop right here, and you can buy the mid of that. So let's just talk that out. Here's your stop. There's your buy. And then, you're expecting that to be taken out. So we'll just, yeah. That is really annoying. Okay. So you've got your stop is 11 points, roughly. And you can still use the 3 if you wanted to, and then use that as an add-in. But regardless, whatever. Point being is that you can dig into here and expect to grab that. You don't really need to tighten up your risk, and then you get paid out on the risk to reward there, and it runs out. And that is the process. So just to review, number 1. Pick your order block, pick your fair value gap, pick your breaker. That's your high time frame support and resistance on the 1 hour time frame. Then from there, you go dissect that time frame and look for a bias supporting Betty or Suzy. Then you'd expect it to be tested. And you look for that you look for your bias supporting Betty or Suzy on the 1 minute NF, or the 1 minute time frame. If it is not there, you have to wait for the larger time frame to be tested, and then not break it, and then create a 15-second. Well, actually, that's a good question. That's a good question. No, it has to create a 1 minute. It has to create a 1 minute Betty. So where does it do that here? It doesn't. Well, you could say that's one, but it really doesn't. That's not convincing. Do you want to buy that? I don't. That's pretty convincing that something has changed. The order flow has changed. Pretty sure about that. So, that is the process. Again, just to restate, you start with the hourly, and you map out your premium discount relationships. So in a case like this, you have, if we were to do this week, you've got premium. And so you're in the discount of premium anywhere down here. You're in the premium of the premium anywhere up here. So if we see a Suzy get created in or above premium of premium, that's very consequential. It's very important. So we're going to be wanting to know what that means. And then from our perspective, we can actually, I don't know, maybe that's a thing we could do. We could take this and just cut it in half and just say, look, I'm not really even interested in anything above mid long, because I've just purposely cut it in half. And I'm expecting Betty to throw the ball to Suzy and Suzy to throw the ball back to Betty. And whoever's in control will hold their mid, and we will go to the other mid. So like, for instance, this mid didn't get tested, and then that mid didn't get tested. So where are we going? And once this fails, like once we broke out of here, all short. You should be short into this mid. And then the question becomes, will we create another Betty? And in this case, we didn't. We didn't create another Betty. We needed to come down a little further and then create a Betty. And then that Betty took us all the way up to the mid of Suzy. That is the process I want to use for bias. Bias and context. How I understand which direction the price actually should be going. In order to figure out if I'm able to buy, like what I did Thursday, just to review, is I started buying in here because I wanted this to mean something. I wanted this to be a Betty. I wanted it to be, before I really fully understood it. And instead, what happened is that I was just buying something that had no reason to be bought, and I got ran over. Then, of course, the Betty actually gets created, and then it runs higher. So having a solid understanding of the major bumpers in the trading range, so that you can understand, like, where does sentiment actually change for the whole area. Where does sentiment actually change? Well, sentiment didn't actually change until right here. This is where we said, okay, now it's clear we are going lower. As soon as that broke. Now, it didn't have to break this much, but as soon as we broke that, that's when it was clear, hey, we had a Suzy in ultra premium break, which means we're very likely going down to the discount of the Betty. So I said we had a Suzy, an ultra premium Suzy break, and then that means that we're going down to at least the premium, if not the mid, of Betty. So, all right, that's that.